Hello everyone, and welcome back to the studio. I'm Siddharth Venkataramakrishnan, the FT's Banking and Fintech Correspondent, and I'm delighted to be joined here in the FT studio by David Mercer, CEO of LMAX Group, a digital technology company based in the UK, one of the leading independent institutional bodies which looks at both crypto trading and traditional FX. David, thank you.
Great to be here today, Siddharth. And I know that's a bit of a mouthful, don't worry.
Yeah,
We'll simplify it for you going forward.
Excellent, thank you very much. So David, when we talk about crypto quite a lot, we end up having discussions usually about the retail side of things, sort of crypto roundtable yesterday, and talking about, the more interesting areas, not so much Dogecoin, but the institutional side. And I know that's something that we've been talking about before. So from your perspective, what are institutional investors really interested in when we see crypto?
Well, number one, I'd say first and foremost, it's market access. I mean, we're not there yet in terms of the crypto world. So let's just look at the size of the market. Total value of crypto assets is $2 trillion. Total assets in custody today in traditional finance is 200 trillion. So it represents today 1% of the market. But they would like to engage. There is a couple of things preventing them. So we need some deterministic regulation, and we need some better credit intermediation. So just so that they can move their traditional models. When I say they, I mean the banks, I mean the asset managers. So if you look at LMAX Group, we operate 6 exchanges, one of which is LMAX Digital and Crypto. All the world's largest banks and all the world's largest proprietary trading firms trade with us in our traditional asset class, which is foreign exchange. The funds and the brokers were able to adapt to crypto easily. The banks and their customers, the asset managers, it was a bit more difficult. So right now, I'd say, they crave that market access, but they also crave a public market framework where they understand the rules of the game.
Brilliant. Actually, on that note of regulation, I mean, obviously we're seeing different jurisdictions rather taking very different approaches. I'm curious from your perspective of any particular standouts, or where does the UK sit in that regard?
Interesting, the difference between, say, policymakers and regulators. So from a policymaker standpoint, it makes total sense for the UK or the US, depending where you're sitting, to fully embrace crypto. I think what we've established post-pandemic, and even after the atrocities in Eastern Europe, is that crypto is here to stay. So it makes sense for London to retain its place as the preeminent capital market in the world, or for the United Kingdom to be able to still hold their head up high, for them to try and own that asset class. And primarily, look, if I was involved in government, simple reasons for that, taxes and jobs. There's an awful lot of job creation at the moment in crypto. And of course, if you believe any of the valuations out there at the moment, there's a lot of taxes being paid. Now, for the regulators, I have some empathy. It's still small. And what is crypto? Is it like Bitcoin for payments? Is it a security? If you move into the Ethereum world and if you move into DeFi, almost certainly securities. And then, of course, the overriding question is, who are you looking to protect? So what do you do first? Retail versus wholesale. So I think there's a wide area for them to consider. My personal belief is that regulation for all of it exists. Bitcoin is 40% of the crypto market cap today. So let's address that first. For me, it's a currency. At LMAX Group last year, it was the 8th largest traded currency pair. So Eurodollar being number 1, down to BTC USD being number 8. So let's regulate it or address it like a currency. Anything that looks like it has a dividend or a yield or an interest rate, it's probably a security, so regulated there. I think the framework exists within existing capital markets. But you asked a question about, is any jurisdiction winning? I think we need to be careful in the United Kingdom, and the United States should also be careful not to fall behind, because there are regulators such as the MAS in Singapore who are moving ahead quickly because they see the power that crypto could have and that the wider DeFi world can have, in that they could then become the epicenter, if you like, the global market for crypto. So, but look, I think post the invasion, what did you see? Senator Warren's sanctioned bill, that's a good thing, shouldn't be required if everyone follows AML rules. Executive order by President Biden, the ECB discussing a framework, the Bank of England saying the same, mostly saying be careful what you're doing. So I think this is actually a good thing. And I think it's good for crypto, and it's good for wider capital markets that the senior regulators in global markets are addressing it. We cannot let this asset class be governed by island regulators or offshore regulators. And it's very important, coming back to where I started, from a policy maker standpoint, that the regulators move at the same pace that the policymakers would like them to.
Brilliant. I'd be curious on a slight curveball here on just thinking about the institutional investors, how much there's an element of for want of a bit of acronym, FOMO, and sort of a desire to kind of get into. And I think we saw this more with, say, NFTs, payments companies buying CryptoPunks. I mean, are you seeing sort of shift within, sort of from people seeing it as something which they need to be part of sort of the avant-garde, to actively, this is a space which has innovations for our industry?
For sure, there's a part of that. I mean, it's a bit like the natural evolution of capital markets. Go back to the early days in your career. Friends of yours had stock portfolios. You may not have known how to access that market, so you learned how to access that market, and then you bought some of the bigger stocks. Somebody might have said, I've outperformed my wealth manager or something, or my pension fund, because I bought the NASDAQ or something like this. I think there's a lot of stories out there. People only tell you about their winners. They never tell you about the losers. So, I made 400% on XYZ coin. So certainly from an individual standpoint, all the way up to institutional standpoint, they now know they have to be in it. Now, just put that in perspective. That's very different from pre-pandemic. That's very different from 2018 when I launched LMAX Digital, our sixth exchange within LMAX Group. At the time, people were saying it could be here today, gone tomorrow. Now, I think when all those things I've just talked about, all the major countries in the world talking about setting up regulations, setting up frameworks, it's here to stay. So likewise, when you look at the biggest institutions in the world, the banks, the asset managers, the custodians, they now all have a strategy. So in 2021, I guess people spoke about institutional adoption. In 2022, I fundamentally believe you will see that institutional adoption. One little microcosm of that is, in 2018, I asked the 35 banks who trade within LMAX Group, were they interested in taking my market data feed for LMAX Digital or for crypto? Not one said yes. As of today, 14 of that 35 are taking that market data, which means they're working on a strategy.
Yeah.
Now, which part of the market will they access first? Will they invest in it? Will they trade it? Will they hold it or be a custodian? Will they clear it? Each institution is deciding their approach, and each one will suit them. So back to your point about FOMO. Yeah, they might have had FOMO in 2020, 21. I think now it's just a reality. They know it's here to stay, and they will be active in this asset class as they are in every other one.
And you're saying they're taking quite different strategies depending on there's not a single sort of cookie cutter approach, as it were, for.
Well, Correct, there isn't. Depends what the strategy or the goal of your institution is. So if you look at the biggest custodians in the world, so 3 of the world's largest custodians, who are banks, control half of the world's assets, so 100 trillion out of that 200 trillion. It's natural that you would expect them to focus on the storage and the custody. Look at the biggest retail banks, commercial banks, they might come at it from a private wealth perspective. Likewise, you look at asset managers, and it's, can we permit customers to hold it within their pension fund or other portfolios like that? So there's not one defined strategy, but the one thing I would say is they all struggle with touching, owning, holding, storing the physical cryptocurrency today. That's the challenge. So you probably saw, not to be too advertorial, but last month we announced that we were launching crypto futures on our FCA regulated MTF to be cleared by SIX Group. That is to assist the adoption by these institutions, because that fits perfectly into their existing framework. So they can offer access to their customers to crypto on a regulated MTF and use the plumbing, the infrastructure, the clearing infrastructure that they're used to in traditional finance. Now that is a pragmatic way for them to approach the market. So I think at the moment, it's still easier, bizarrely, for any capital market. It's more easy for these hulking institutions to adopt derivatives than it is the cash product. That's the other way around.
Yeah.
Normally we develop efficient cash markets and then we overlay derivative markets on top of those. So that's how we're trying to help. And I think you will see the first adoption you will see in derivatives. And then when those institutions become comfortable with having crypto on their balance sheet or holding a crypto note asset of some sort for their customers, then they'll be able to move into the cash product, which is really what crypto is today and what LMAX Digital launched doing.
Brilliant. I'm just going to check here quickly, see if we've got any questions from the audience. It's like hoggy with all of mine. No, it doesn't seem to be. Sorry.
No questions late in the day. What's happening, Siddharth?
No, one is being typed up right now. Can you comment on Fabio Panet's comments from the ECB today about cryptocurrency being a Ponzi scheme and calling for a regulatory clampdown?
I can't comment on that particular commentary because I haven't seen it, I haven't heard it. But look, I think that's pretty well covered yesterday. And there was a pretty famous interview, and it was written up in your newspaper. Look, it's my opinion that that is a gross generalization. It's possible in any walk of life that people could launch something illegitimate. It happens in traditional finance, but that is not the goal of decentralized finance. It is not. And actually, I'm going to spin it the other way, and let's step back a second and think what decentralized finance is. So crypto itself set out to be decentralized, anonymous and trustless. The anonymity bit is difficult, right, within finance, because you have FATF guidelines and stringent anti-money laundering legislation that everyone adheres to within traditional finance, and every country in the world, bar one, has signed up to. So I think it's a real generalization to say, well, crypto DeFi is made up of people looking to benefit from illicit means. What could happen if you move forward a little bit with DeFi is that it could just be the most efficient use of capital that doesn't exist today. So our viewers will understand stock borrowing and lending. Our viewers will understand repos. The man in the street doesn't understand that. But put simply, we could all post our assets onto the blockchain and earn a yield, earn an income from that at any given time. And it doesn't have to be end of day, end of week. It can be 7 days a week for a start. You could lend someone your spare Mexican pesos for 6 hours and earn a yield on that, right? So that is the idea of DeFi. If you think about the tokenization of anything, that has to be a good thing. When I say anything, I mean assets that are held in any balance sheet. That's really the purpose of decentralized finance or DeFi. Of course, like there will always be people trying to game any market, any system, but normally they get caught out. So I think it's a little bit, as I say, generalization, and I think our regulators and our spokespeople could probably do better and be more responsible for what is a market that will pervade traditional capital markets for the next decade.
Another few coming in. I was actually going to ask one question on the DeFi, and I was just thinking of the IOSCO report, which was talking a bit about the sort of hidden points of centralization within DeFi. And I was just curious from your perspective how you see that.
Sorry.
Usually it's me kicking the table. Yeah, how you see that shaping up, because I feel like that's been an issue which has sort of plagued some of the discussions for a while.
Centralized and decentralized is difficult. Okay, so I am not going to paint a different picture there. LMAX Group operates centralized exchanges. Why do we do that? Why does every other exchange group in the world do that? It's quick. It's about low latency. It's about precise execution. Decentralized finance means that everybody can trade with everyone. So it's quite hard for a centralized exchange group to exist in that decentralized environment. That said, that decentralized environment today creates a lot of pricing arbitrage, a lack of uniformity of pricing across the globe, so people are disadvantaged. We actually were part of the PIF network, which is exactly, they call it Hi-Fi for DeFi. So it's centralizing market data, if you like, or decentralizing market data. That means there can be valid pricing of any asset in the world. We think that's interesting. We think that's exciting. We think that's a way that a centralized exchange group can exist and help the decentralized finance world to grow. But that's the first step. The valuation of assets within decentralized finance is key, and that's why the LMAX Group invested in the PIF network.
So we've got another question, which is asking, saying you're starting with derivatives. What other crypto digital products do you have in the pipeline?
First of many. We're not, funny enough, as a group, we're not people that normally say coming soon. So if you look at what we do today, but this is what I think is hugely exciting in capital markets. So we would list 100 different currency pairs. So everyone knows about Eurodollar and cable, sterling dollar, driven on dollar yen and Aussie and these things. And we also do indices, we do precious metals, and we offer through LMAX Digital the core crypto assets today. Moving into listed derivatives is really exciting for us. So that's new within the LMAX Group. But if you imagine the products I already offer, and in our new exchange, our latest exchanges in Singapore and SG1, first time ever, we will offer fiat products and crypto products on the same infrastructure within the same exchange with the same regulation. So imagine those products I just mentioned, all trading against crypto. Imagine trading the S&P Bitcoin, gold, Bitcoin, Mex Peso, Bitcoin, Swedish krona, Bitcoin, Ethereum, FTSE 100. So I think that's what's coming, trading everything to everything. And here's the kicker, 7 days a week, not 5 days a week. We're well used in this modern world, especially in your job, to, being able to interact with anything, anytime, Saturday, 3 in the morning, Sunday, 5 p.m. Why do markets close at 5 p.m. New York on a Friday? Guess what? Crypto doesn't. Within LMAX Group, LMAX Digital has been fully operational 24/7 for the last 4 years. We've shown it can be done. Because of that, we're able to offer weekend FX markets. So I think, to answer your viewer's question, imagine crypto pervading all of traditional assets and you being able to trade any product out there, and naturally crypto indices and crypto options will follow.
Brilliant. We've got another question, so perfect. Can you see some of the value from DeFi, such as auto closeout, replacing traditional margin calls, spreading into traditional assets that are traded today? So I suppose sort of...
Well, I don't want to be disrespectful to your questioner, but it already exists within LMAX Group. So we have 3 brands: LMAX Exchange, LMAX Global, LMAX Digital. LMAX Global is our FCA regulated broker. We've had auto liquidation since the day and hour we've been regulated, which is 2010. So it already exists. I happen to think margin calls are for a wholesale or institutional segment only. You could have a hybrid of margin call and auto closeout based on the quality of credit or the quality of collateral. The technology already exists and it's been used in traditional finance for decades. So it wasn't invented by DeFi, far from it. But actually, I think underlying that question is, how easy is it to re-collateralize your position or to send margin to your clearer or to your credit intermediary? It's quite difficult right now. If I miss a cutoff, I'd say, please, Siddharth, please trust me, I've just sent you $10 million. And you said, no, you're on margin call, we're gonna have to close this position, right? You'll be in default.
Yeah.
If I could move assets on the blockchain as easy as that, then it could ease everything in capital markets, certainly ease the friction you see in credit markets. So I think you'll see when you talk to me that I'm not an evangelist. I'm not saying everything in traditional markets is perfect, and I'm not saying everything in crypto or DeFi is perfect. But I think we can take the best from both worlds and end up at a more efficient capital market for all.
Well, since nobody else is stuck with questions, actually, I was going to ask about, we talked about this briefly on stablecoins. I'm thinking about sort of other exchanges where BTC USDT has been the traditional pairing. I was curious from your perspective where they fit in, either from the trading aspect or just more generally the regulatory side, since they seem to be the flavour of the moment for all and sundry.
Yeah. Stable coins as they stand today shouldn't really be required. It's as simple as that. They're required today because it's difficult to get fiat into the crypto ecosystem. And it's difficult to move or settle fiat at the weekend. There are a couple of banks that provide it, but they sort of exist really only within the sort of the crypto ecosystem. Whereas a US dollar backed stablecoin is effectively crypto. So you can move it 24/7. Now imagine, and I'm not a policymaker and I don't work at the bank or the Fed. Imagine if you had a digital pound or a digital dollar or digital yen, then that surely can replace the stable coins. So I think central bank digital currencies have a part to play. The crypto evangelists out there will hold their hands up in horror,
Yes.
because look, obviously they will be trackable, traceable, who can hold them, the issuance of them will be sure, who holds them will be defined. There'll be a lot of regulation around that. So it might be slow, but I'm an optimist. So I believe that if we arrive at the right digital pound or the right digital dollar, then we could potentially replace some of the trading volumes you see today in stablecoins.
Brilliant. I think I have time just for one more, very briefly, very, very briefly, which is just to ask about the ESG side of things and think about the environmental impact of crypto and what you hear from institutional clients on that front?
So I'm no expert in that field, but look, it's something we all have to be aware of. It's something, when you run a business and you employ a lot of young people, you have to consider. So it might have been something that people in my era or people I learned from weren't speaking about. So we must keep one eye on that. Now, Bitcoin mining, crypto mining is very energy intensive at the moment, very expensive. You could argue bad for the planet. I'm told that it could actually end up being beneficial for the planet because a lot of the mining can be moved to renewable energy sources. Now, it's quite easy, if you know what you're doing in that space, to create renewable energy or plants for renewable energy. And typically, unlike fossil fuels, you can create 10x or 50x. So it already exists that miners or crypto exchanges start trading to find the cheapest and hopefully the best for the planet energy source. So I'm hopeful that it changes and we move away from the sort of high burn you have at the moment. And I think it's been talked about so much that I'm pretty certain most mining will be done through renewable energy sources in the years ahead.